Hey everyone, welcome in to another daily editorial here on the KE Report. It's going to be a bit of a shorter daily editorial day for us as the U.S. markets are closed. I hope everybody has a good Martin Luther King Jr. Day. But we did want to get some content up here, especially because we are chatting with T.G. Watkins, Director of Stocks over at Simpler Trading, also editor of the Profit Pilot website. We're going to start off with a couple commodities, then move into markets and probably touch on the cryptocurrencies as well. Commodities first here, TG. Uranium continues to be a standout, and even at the end of last week, shot higher on the back of some news out of Kazatomprom and adjustments to their production plans. We're looking at the URNM chart, which is the Sprott uranium mining ETF. We see just how powerful that has moved just this month, again, off the back of the spike in uranium prices. TG, what are you seeing in the uranium sector here in terms of balancing out? Has this run gone too far, or are there more legs to the upside?
It's looking pretty strong overall. And I know over the last few months at this point, that's what we've been talking about. That, hey, I think we see uranium coming up. In fact, I know I said that right around, was it August, that I saw uranium starting to move up, and that was pretty much the perfect entry right there. And then we talked something around end of September, and I said, hey, it's probably due for a pullback, which it did. And then and that whole conversation, I said, it's just a pullback. Maybe take a little bit off, but don't try to short it. Don't try to get out of it. Like, just take some profits. It's a little too overextended, and then it just needed some time, and this is what it did. So if you're looking at URNM, over the last month and a half, it really just kind of flagged sideways at a double top. I mean, there's a double top all the way from September, kind of October, but then there's also a double top going all the way back to November 2021. And what it did is it consolidated sideways, and you can actually look at the charts. It perfectly bounced or followed and then bounced off of the daily 50 SMA, and there was a squeeze. So a lot of things that said, hey, there's a possibility. Now, you guys all know that I have the Moxie indicator, which is what I created and is the crux to my trading. And we actually got a trigger, a green buy trigger on the hourly chart on January 9th. So if anybody didn't see it, the Moxie indicator fired right that day, and then it's been going up since then. Of course, sure, after a move like this, it's been 4 days basically straight up. It is kind of extended. I wouldn't necessarily say that Friday is a great day to go buy this thing, but if you can find intermediate little pullbacks or a little bit flag over the next few days, if you still want to get in, there will be probably opportunities. You just don't want to buy on the fourth day of a vertical move. There will be opportunities a little bit later down the road to get into something like this.
Well, TG, when you look at something like URNM, or if you look at a lot of the individual uranium stocks, a lot of them have gaps on the charts now where they gapped up so hard, especially some little ones on Friday. What are your thoughts on gaps? Do they always have to get filled? Can there be breakaway gaps? And then what would you be looking for as an exhaustion point on a move like this after, like you say, 4 days of a vertical move?
I don't think gaps always have to get filled. In my experience, it's not always the case. A lot of times it is, but just not always. And so, yes, I see something like this, and there's just the tendency that when things get overbought, they settle down. There is almost always another opportunity to get into something like this. It may not be at a lower price. It might be on a little bit of a dip. It might be on a sideways move. If you really want into something that is doing well, just find a place where it's kind of come back in and closer to some moving averages. So you can look at maybe the daily 21 or the daily 50. Those are typical places where price can come back down and tap some support and then move up.
So, TG, talking about some of those moving averages, some of these stocks, a lot of these stocks have now separated quite a bit from the moving averages. So, is there a certain time frame that you like to see a retest, or on the other side, truly a bull market, they're not retesting it for a little while, keeping that distance?
Well, I mean, I'm looking at DNN, for example, and you can see that routinely this one comes down to its daily 21 EMA. So that's kind of that would be your fastest bet to get into it. But then otherwise, it does also quite often break below the 21 and head towards the daily 50. So, that seems fairly easy. And then you have CCJ, that's another one. And same thing, that over the course of time, it pulls back to either the 21 EMA, or it breaks through and gets down to the daily 50 SMA. So the fact that this thing is straight up and breaking out after 4 days, hey, that's great. But if you just look at the history of these charts, there's an opportunity that they do tend to pull back. So just try to be a little bit patient, and you'll find an opportunity to get in.
Okay, TG, appreciate you sharing a couple of those moving averages that may be good support, maybe a good place for people to re-enter a trade, or if they missed the trade, to get a position going. Let's move things over, though, to the yellow metal, to gold. It's had kind of a lackluster year to start, but it's still trending a little bit higher the last few trading sessions. Ended the year strong in December. How are you seeing the setup in the precious metals, in particular gold?
Yeah, gold has definitely taken its time, and it's been a tricky one because it really hasn't done much over the last 3 years, really. But if you look at the monthly and weekly time frames, because you really kind of need to zoom out, I think, on something like this that is so slow moving and really kind of dealing with this upper thing. It's, first of all, not in a downtrend. Like, we just need to recognize that. If anything, you could say that this has been in a very large sideways consolidation pattern since the end of 2020. And yes, there have been some big dips, but it's not in a downtrend. And I look more specifically, and over the last few months, even towards the end of 2023, it took another dip, but that then propelled it into virtually new highs. It really is tapping new highs. And then if you look at the, say, monthly bars, we have 3 monthly candles that all have the bodies above previous areas that used to get wicks up there, but not bodies. And so now we have 3 bodies that are staying up there. So I look at that and I say, price is actually spending time up in a new area that it hasn't done before. And I think it is also just a matter of time until this thing probably keeps moving to the upside. I think that given the fact that, gold just can't quite get past this upper area, means that it needs to consolidate, it needs to catch its breath, it needs to probably build a little bit of sideways momentum, just kind of like uranium did, and then start to move and break out. So I think it's going to do basically the same thing, just in its own way, and I wouldn't be bearish on gold.
What about the gold stocks then? Looking at GDX, let's focus on GDX then, because look, gold, you are right, is holding at some high levels, almost all-time highs, and consolidating around those. GDX has really just been in a wide trading range, but it's tightening here quite a bit in the last year or so. But that trading range has been around really since 2020. So where do you see GDX going?
Yeah, and GDX is definitely more difficult because it has been all over the place, really. It's been a challenging one. But let's just look at October of 2023. That was the most recent low. And before and after that, it's then created an inverse head and shoulders. And then what it did is the weekly 8 got over the weekly 21 EMA. And so at that point, I have to say, until that changes, it is bullish, and it's just trying to figure itself out until it wants to go higher. I would also argue that if you look at the daily chart, the daily 50 SMA is below the daily 200 SMA. So technically that's bearish, but what I think is happening is it's chopping around, trying to narrow the distance between the 50 and the 200 so that eventually the 50 can cross over the 200. So I still view this as a wide chopping range that is working its way up. Because again, you kind of go look at your charts, go look at the weekly, go look at the daily, step back from your computer 5 feet and then just look at it. Because sometimes I think we look a little bit too nitty gritty into these things, and we look at all these little things and like, oh, it's been a downtrend. Like, no, it's actually just in a very wide, choppy range. And if we just open our eyes and zoom out a little bit, you can be like, oh, this is actually trying to move higher. It's just doing it in a very choppy, wide way that can be really, really difficult to ride and hang on to. But I think what's happening is we should be watching for the daily 50 to eventually cross over the daily 200, and that could help get things going, especially if gold itself is going to start breaking out. I would imagine the gold miners should be shortly behind.
Yeah, TG, that's such a good point, to make sure you're looking at charts in different time frames, because sometimes, as you say, we get stuck in the nitty gritty in the short term and maybe miss the longer trends on the weekly and monthly charts. Speaking of the 50-day, though, going back up to the 200-day, a lot of people would call that a golden cross. Maybe just speak to people about the importance of moving averages on shorter time frames going up through longer time frame moving averages, maybe for people that are not as familiar with charting, and why that's such an important signal.
It's huge, really. All of my trading revolves around moving averages with a handful of indicators. And it can be challenging because if you do start looking at multiple time frames, you can be like, well, Is this in an uptrend? Because on this higher time frame, yes, it is over an uptrending, say, 50 SMA. But over on this lower time frame, it's definitely down below it and it's trending down. And so you kind of have to decide which time frames you're going to anchor to. Because if you're like, oh, I really like this weekly chart, I'm going to stick to that. But then you start making decisions off the hourly, you're going to chop yourself up because you're now changing what you're anchoring to, and you're going to get well chopped out because you're going to then believe the hourly too much when really you should be sticking to the weekly if that's what you decided. Now, if you're like, okay, the weekly's telling me overall we're in an uptrend, but I'm going to be agile and I'm going to get in and out of something, then yes, you need to respect the hourly and you need to make those decisions if you are going to get in and out that quickly. Obviously, the daily is probably somewhere in the middle. You just need to make sure that you don't have style creep. Figure out what you do and where you're relying on, and that's why with the GDX, I'm kind of saying, yeah, this thing has been all over the place on the hourly chart. So I'm not really trading the hourly chart. I'm looking more at the daily and weekly because I'm waiting for the bigger picture to start setting up, and I like what's happening with this narrowing of the daily 50 and the daily 200, and eventually, once price really starts to get into gear and into a trend, you will see it will start to respect these moving averages better. Just like if you look at URNM, that thing did a great job following the daily 50.
It's so interesting to look at GDX here on even the daily and weekly because a lot of these moving averages are, for the most part, moving sideways and have been moving sideways for a while. What else do you look at in terms of momentum, in terms of any other sort of technicals that would confirm when a move is made that that move has legs?
All right, so this is another thing. I have a lot of classes that I have out there. If you guys come over to simplertrading.com, you look up Moxie and you look up me for my classes. I have a lot of basic classes and I have a lot of deeper classes, but I'll give you guys some of the crux of what I look at. The challenge with GDX right now, and you're like, man, this thing's all over the place. Like it won't hold the moving average. Well, that's because it's going sideways. GDX is not really in a trend yet. It's still going sideways. And so, yes, even though the weekly 8 is over the weekly 21, and that is the beginning of the start of a bullish trend, it really hasn't engaged with any of these moving averages quite yet. And so this is what's challenging is because when you are actually in a trend, every time price comes down to test moving averages, it makes higher lows because those moving averages are angled up. But here, since everything is sideways, it's easier for price to go up and down through those moving averages because it's just not in a trend yet. And that's something that you can see with gold is it's done a little bit better job because if you look at the weekly chart, the moving averages are in a steeper uptrending direction. Therefore, every time it pulls back, it actually gets propelled higher. And that's something we can even see. I mean, you saw that with uranium. We're seeing this with the S&P. I mean, if we just switch gears quickly, if you look at the S&P in October 2023, it pulled back into an uptrending monthly 10 and an uptrending weekly 50. And what did it do? It propelled the market to new highs. And that's because the moving average was angled up, not flat.
Well, TJ, do you have any thoughts on silver? That's the only precious metal we haven't talked about so far, and its chart is a little sloppier than gold. It's been more of a channeling sideways experience the last year or so in silver, the lesser precious metal. Any thoughts on it?
Same thing. It's a tough one. It hasn't done anything yet. I wouldn't short it if you were talking, long term. If you're talking monthly, weekly charts, I wouldn't short it. If you're a very active person, you're reading the daily and hourly, fine, you can go long and short. But this thing doesn't look like it wants to break down. The moving averages are at least stacked positively. Now, price has not engaged with them yet. It's not quite in a trend. But again, if gold starts to break out, if GDX starts to work, then silver is going to go with it. And I have a feeling from what I've been reading and hearing out there that silver might actually play catch up because I think there's a lot of demand for silver because of solar panels and other manufacturing things that are starting to pick up and catch on.
Yeah, silver's interesting because it does have some of those industrial uses outside of gold, which is more of the monetary metal, but silver also gets tied in there. Let's talk about U.S. equity markets then, because boy, oh boy, strong finish to 2023. 2024, we started to see a little weakness, but that weakness was pretty quickly bought back. The dip was very shallow. What's your outlook on, I guess, the recent strength, especially at the tail end of last year for U.S. markets?
Yeah, so as far as the major indices, you could see that they did take a dip. That was needed. The run from November to December was amazing, but it was too amazing. As we know, when everything gets on one side, it's too much. We had the number of stocks over their 20-day and their 50-day SMAs run up to 90%. It just doesn't get much higher than that because everything is up. So there's no more room to go to the upside because just literally everything is thrown to the wall to the upside. And so what we had to do is we have to build in some room in order to go again. And what that means is we have to cycle back down. We have to have some pullbacks. On the surface, you look at the NASDAQ or the SPY, and sure, there was a little bit of a dip and it got bought back up. I think overall that means clearly we're in a good, strong bull market, and the indices are consolidated, flagging sideways, and they'll move back up. However, you look at something like the IWM and it pulled back and it's still pulling back. Well, that's because the small caps kind of probably got a little bit over their skis and they ran too far and then they ran out of support. So they most likely or most prevalently have had to pull back in order to fix their overbought condition, whereas the larger caps have mostly gone sideways to fix their overbought condition. It's very similar to what we saw, I think, around May of 2023 when the debt ceiling crisis was going on and the S&P went sideways while everything else cycled back down. I know we all talked about this at the time where we saw breadth go down. We're like, okay, is this going to pull the market down? And then it didn't. It just went sideways until underneath the surface everything cycled down and then built room to go higher. So yeah, well, look, this is really just this is a pullback. This is consolidation in a bull market. I don't see any reason why we will not be seeing the S&P make new highs. 2024 should be a good year. Of course, there are going to be pullbacks and dips like this, but everything's looking good, really. This just feels like a good, normal bull market, and this is just doing its normal ebbs and flows and cycles in order to go from overbought to oversold to finding opportunity to go higher after a while.
Yeah, TG, so just a normal corrective move inside of a bullish market trend. And like you say, some of the larger cap stocks and some of the indexes are almost more correcting in time than in price. But some of the smaller cap stocks that really ripped higher, maybe having a bit more of a corrective move. You had mentioned a couple individual stocks to us off mic. I may just throw out a couple of them just so you can make the case on what you're seeing on the individual charts and why you don't think this is a shorting opportunity, but really maybe a chance to load the boat again. That's Roku, Carvana, and Wayfair.
Sure. So, for example, Roku, one of the ones I mentioned, had great moves after had earnings, which is really everything had earnings, and that's what kind of kicked off the November, December rally. It went straight up for 2 months. So at some point, these things need to come back down. Roku, for example, if you really want to, if you're savvy like that, sure, you could short it. I wouldn't recommend it because then you could look at something like DDOG, DDOG, and it was overbought just like Roku, but it did a 2-day pullback and now it's right back up to where it was. So trying to short something in an uptrend can be very dangerous because you have to be very quick and it may or may not actually work out. Roku, sure, it pulled back over the course of time. It was an easy short. DDOG, yeah, it was a pretty big short, but it lasted a day or two and it's right back up. And other names are just going sideways. So you never know which one you're going to get. And that's why I just say don't try to short something in an uptrend. Just be patient, buy dips, and get out, take profits if it's too extended to the upside, and then just ride the wave. So don't really worry about the short side.
Fair enough. Don't fight the trend. The trend can be your friend. One last market that I do want to talk to you about, cryptocurrencies, especially Bitcoin. Boy, oh boy, it's been a wild ride for Bitcoin. Actually, Bitcoin did very well last year and to start this year, mostly on the back of ETF approval rumors. It's been already a wild ride. Lows of around 40,000 up to about 50,000. Now we're trending back in that lower range, little over 40,000. What do you see in the Bitcoin chart?
Bitcoin itself is actually doing just fine. And I think that, again, has to do with the ETFs. They have to buy the Bitcoin and own them and this and everything like that. It's been on an absolute tear and it hasn't stopped. But for anybody out there who has not heard or has not experienced what we call buy the rumor, sell the news, go look at the Bitcoin miners. MARA would be a great example. Riot, Cypher, Hut, you name it, Hive, any of them, they all kind of did the same thing. And what it was is they ran up in anticipation of all these ETFs and the news and Bitcoin moving up. But then as soon as the actual news came out that the Bitcoin ETFs were here and approved and out there, all the big players started to sell the Bitcoin miners as probably amateur buyers coming in there, reading the news. Oh, Bitcoin is now a thing in ETFs. And they're like, I should go buy Bitcoin now and buy these ETFs. Well, they're getting sold into. And that is just kind of how you bring a pig to the slaughter. And that's buy the rumor, sell the news.
TG, I'm glad you brought up the crypto miners because I was going to ask you about those. It almost looks like they're in a completely different trend than the cryptos themselves because they already had started pulling back even when some of the cryptos were still plowing higher. How are you seeing something like Riot, for example?
It has been a little bit challenging to correlate because Bitcoin started to move and then the miners weren't really moving. Then all of a sudden the miners started to play catch up. So this is why we kind of talk about gold and GDX. There could be something here. GDX is kind of puttering around down at the lows too. And if gold actually starts to break out, then there could be a whole like, oh, okay, this is happening. And then we could see, hopefully, an explosion in GDX. That's kind of where I'm looking at and looking for. But yeah, Bitcoin led the way, and then the Bitcoin miners started to do their thing. Now, Bitcoin miners, in a league of their own, they are more exponential. I mean, MARA went up 200% in just a couple months, whereas Bitcoin went, I don't know, 50, 75, 80%, whatever it did. And so I do like to trade the miners just because of how they move. And the fact that Bitcoin itself is still up, but the miners are down, well, again, buy the rumor, sell the news. And we look at the miners and they were just overbought. One thing we look at, what is the actual commodity? What is the coin that these companies and ETFs are buying versus what are the companies that are related to it? And that's what you have to understand is that there is some disconnect between them. So trade the charts. Bitcoin itself still looking pretty good, still an uptrend, still following these moving averages as we talked about. But something like MARA and Riot and Hive, yeah, great runs, followed the moving averages for a while, but they got way, way, way too overbought and they got sold into. But now we're just waiting for, like we said with the small caps, the next cycle down. We have to let these things come down, find their support, shake them out, and hopefully they start moving up again sometime in the future. And we want to ride the next wave for that.
All right, TG, thank you very much for your insights here on a couple different markets. I really do appreciate you simply filtering through the noise and looking at the chart, sharing with us where you see things moving and also how you use some different technical factors here. But again, be sure to check out TG's website, Profit Pilot, and also follow him on the Simpler Trading website. TG, thank you very much for your time today. Hope you have a great rest of your week.